All right, everybody, thank you for joining the call here this afternoon, and we'll go ahead and get underway. And for those of you that just joined, if you have any questions, feel free to hit us up in the chat log, as we do have lines on mute. They have myself, Dave Dickey, founder of National Advocates, and Josh Campbell, Vice President of Lender Relations. And if you haven't dropped by the website lately and you'll want to do that, we do have a few new things, including leads and that you may or may not have participated in the past that you want to check out. And certainly that's part of the accreditation program, which also includes the rate advisory and alert service as well. So let's take a look at what we have ahead of us this week. It's a fairly light week in terms of economic data points, but the few that we have are pretty impactful, and the Treasury note auctions this week will be even more impactful likely than some of the economic data points. And so overall this week, we would look for Wednesday afternoon and Thursday to be the days that would potentially be the most volatile. Of course, all things being equal, if the stock market is on the move big one way or the other, that would certainly cause more volatility. But in terms of economic data points and economic data point releases, Wednesday and Thursday would be the most impactful. And just the broad overstroke of the week here would be that the Treasury note auctions on Tuesday, Wednesday, and Thursday can certainly be impactful to mortgage rates and bonds. They are expected to go well because the recent sentiment has turned a little bit bearish towards equities and is a little bit more favorable for bonds. So it's expected that kind of the flight to safety trade that's on globally at the moment will be supported for these note auctions, and that'd be good news for us. The end result is if they go well, we expect mortgage pricing to kind of hang where it's at to maybe slightly improved. The risk is if they don't go well, or one of them doesn't go well, especially on Wednesday or Thursday with the 10-year and 30-year. And if those don't go well, we could see mortgage pricing back up relatively quickly, since a lot of improvement is already baked into the prices, and we're a little bit technically overbought right now for bonds and mortgage backs. So again, nothing came out today, as you see here on the calendar, on the PowerPoint. For Tuesday, we have tomorrow really the only thing impactful could be that 3-year note auction at 1 o'clock, and that's all the times listed here are Eastern time. And so at 1 o'clock Eastern, we'll have that 3-year note auction. This one should go very well. The shorter durations have traditionally gone very well anyway, so wouldn't expect anything out of the ordinary for Tuesday. If for any reason it doesn't go well, that would be likely a bad setup for Wednesday and Thursday. We're not expecting that at all. 3 years should go very well tomorrow. Wednesday, we get a little data point. U.S. trade balance shouldn't be very impactful to the markets at all. But at 1 o'clock, we get a very important 10-year note auction, and that could be very impactful to mortgage pricing. If it goes well, again, we expect mortgage rates to hang where they are and or slightly improve. The risk is that it doesn't go well, and mortgage rates would degrade pretty quickly, frankly. Then we move on to Thursday. This is a bigger day, actually. Big day right out of the gate. At 8:30 in the Eastern time, we get the 1-2 punch about an hour before rates are set. We'll get the January retail sales number. And so all eyes will be on that. All eyes are, frankly, right now on the U.S. consumer, especially since consumer makes up about, and their spending make up about 2/3 of U.S. GDP. And so all eyes from investors are looking at how's the consumer doing? Are they ready to spend? Are they spending more than they were? And so retail sales for January will be highly watched. Again, that's at 8:30. And then at the same time, we'll also get the weekly jobless claims report. And, of course, everything's about the consumer and whether the consumer has jobs. And so on Thursday at 8:30, watch for those two reports to come out and be very impactful, potentially, the morning of Thursday. And then we'll wrap up that day at 1 o'clock Eastern with a 30-year note auction. And really by the time the 3 and the 10 are over, we should pretty much know whether the 30 is going to go well or not. So that should be fairly routine on Thursday. But again, the risk is, for any reason, any one of these don't go well, that mortgage pricing could back up pretty quickly. And the 30-year note is the one that's a little bit more risky because the longer duration tends to be a little dicey on whether investors are going to lock up their money. The low yields that are currently on the 30-year for that term. And so stay close to our alerts. We issue intraday alerts on all those note auctions so that you get the results and know what the potential impacts are going to be to mortgage pricing at that moment. If you're having to make float or lock decisions at that moment, it would certainly be helpful to have that data. Then Friday morning at 9:55, we'll get the University of Michigan Consumer Sentiment Report. It's very important. It's all about the consumer, whether the consumer is feeling good or not. Will dictate whether they're frankly going to spend much or not. And so at 9:55 Eastern, we'll get the University of Michigan Consumer Sentiment Report, and that could also be impactful for mortgage pricing. So as you see here on the calendar, not as busy as you typically see from us, but it is Thursday is a big day with January retail sales and weekly jobless claims. But really, Tuesday, Wednesday, Thursday important because we're going to get the read on those note auctions. So stay tuned for those. All right, well, appreciate you, everybody, joining here today. Again, if you haven't dropped by lately, check out all the benefits of the accreditation program. It has expanded quite a bit over the last 90 days, and those of you on the call that are already accredited already know the value that's brought you in terms of visibility of the consumer, separating yourself and differentiating yourself from other originators and loan shops in the business, so the consumer knows that you have their best interest in mind. And it includes all of the latest and greatest stuff with the Rate Advisor Alert Service, with leads, and we have rolled out some of our sales and leadership coaching programs as well. So take a look at the website under Lender Help, and you'll get more on that. And certainly call or email us with any questions you might have about this and or mortgage pricing and the note auctions and how those turn out this week. Those will be very impactful for mortgage pricing in the near term. Thanks for joining, and have a great week.